Wis says, or asks, how do you see the Australian property market and stock market in the coming 5 years? Now, this has got to be the biggest or most difficult question to answer because we can't predict the future. We don't really know. What I will say, though, is that property prices, particularly in Melbourne and Sydney, mainly Melbourne and Sydney, are at bubble points. They probably will continue to go up, particularly if we get more interest rate. But there's got to be a point in time where they come off at some point in time, whether that's when foreign money stops coming into the market or whether it's when interest rates start to rise again. But there's got to be a point in time where the property market does come off. But many people have suggested that should be the case over the last 20 years, and we've had a pretty strong market in property, particularly in the major capital cities. So hard to know. So what you need to do then, and same with the share market, it seems relatively high at the moment. A lot of people are saying it's reasonably pricey with high price earnings ratios. So the stock market's at a relative high point at the moment. But what you need to do there is factor in the longer term. It's really difficult to time the market and pick stocks. And so you really need to have a plan in place and know that even if something does happen in the future, that you are, as in either the property market or the stock market drops, you need to be able to weather that storm. One of the ways that you can weather that storm is have a cash reserve. That can be within your superannuation or outside of your superannuation, depending on whether you're able to access it or not. But basically, setting up an investment portfolio enables you to get through all conditions is probably the best way to answer that question. But we can't predict the future. We don't know what's going to happen.